Having dipped a toe into the ocean of finance and options trading, Jack decided he needed to find out how he could better manage his risk and investments going forward. So he joined a group of traders who were embarking on their own option journeys in order to discuss and learn from one another. So Jack, have you gotten used to trading yet?
Slowly but surely, but I'm definitely still learning. But watching a coin go up and down is so stressful compared to options where it feels like the risk is much less. Isn't there a way we can make buying and selling assets directly less risky?
There certainly are. And since you mentioned options, did you know there's a method to use that as a kind of insurance? One of the simplest forms of minimizing risk when you own an underlying asset is called a protective put. This is where you buy a put in order to create a hard floor or loss point at which you can sell off an asset you own. Let's say you buy a coin for $15. This payoff line shows how much you could potentially lose should it suddenly tank. But you could buy a put for $1 at a strike price of $12 that expires in 3 months' time. This would limit your net loss to $3 plus the $1 you paid for the premium in the worst-case scenario until the expiration. Combining these two lines, we can see the new profit and loss diagram looks a lot safer.
Wow, so buying put options really is like insurance.
So show me how you would use a protective put to minimize your losses over the next month for a wallet holding 1 Ethereum.
Well, I wouldn't want to be too hasty as small dips are bound to happen. Right now, the market price is $1,600, and it looks like I could get a put option for about $200 below the current market price for Ethereum and for about $80. And that would make my payoff look much better than the original straight line of the coin. So I can keep unlimited upside while having downside protection as well.
Exactly. So if it completely tanks, you're limiting your total loss instead of losing the entire value of the coin. But if it goes up, you still have the potential for unlimited profit, minus the $80 for the protective put.